Well, I think the market really got ahead of itself, especially here in the U.S. markets, thinking that the Fed is going to do either a 25 or a 50 basis point cut at the July meeting. We've been telling clients all year, don't take off the possibility we could even see a rate hike at the end of this year. We've come back a little bit on that just because of how the Fed has positioned itself recently, but I still don't think we should assume we're going to get that rate cut, especially not at the July meeting. Possibly we see it later in the year, but markets really want that. They're counting on it. They're anticipating it, not just U.S. markets, but global markets. And the fact that that was pulled back a little bit because of the stronger jobs number last week, we're seeing markets react to that both on Friday and this morning overseas.
Victoria, what's curious to me, if it really was that strong jobs number that took the prospects of a rate cut or a deeper rate cut off the table for this month in July, wouldn't the markets have reacted much more on the equity side to the downside? It seemed as though we had just a very marginal loss on Friday. Is the rate story still front and center for stocks?
I think it is still front and center. A lot of that because there was that 50 basis point cut that was priced in somewhat on the futures market. Now we're seeing about a 93% probability of just a 25 basis point cut. So they're still getting the cut that they want. We're not sure that it's actually necessary. We think the fundamentals are pretty strong, but we haven't seen the Fed push back very much. Loretta Mester did come out last week, talk a little bit about how she doesn't think it's as necessary as maybe other members do, but I still think we're looking at a 25 basis point cut. We have to watch Powell this week at his testimony on the Hill. This could be his opportunity to kind of temper expectations a little bit.
All right, so given your view on the outlook for rates, are there specific parts of the market that you would be tilted more towards? From a macro side, is it us and developed markets? Is it more emerging markets? And within those markets as well, where do you find that value? Is it specific sectors or stocks that you are looking at in particular?
Sure, we're more focused on the domestic markets at this point in time. We do think that the U.S. market fundamentally is strong. We've had some weak data come out lately, but we also have a lot of positive numbers going forward, and we've got the strong consumer. The consumer has been really good with household balance sheets, strongest they've been in 10 years. Consumer confidence doing well. Consumption still averaging around 3.5% annualized this year. So we're just looking for opportunities, not in specific sectors, but across the market. Some of the names that we've looked at this year include McDonald's, Charles Schwab, Palo Alto. So really kind of looking across the board at places we find opportunity. Intel is actually a place we added this past month just because that sector was hit so hard with the China trade tariff issues. Look for places to find specific opportunities, not necessarily all in on one sector.
I'm curious that the Intel story, I can kind of see it's been a very beaten down stock on the semiconductor side of things. I mean, trade related and certainly company execution related. However, I'm curious about the thesis for McDonald's, a company that keeps on making new record highs seemingly every other day in the market. Why is it that McDonald's stands out even after the run it's had to record highs for that stock?
Sure. McDonald's is a name that we added earlier in the year, and we actually put it in the portfolio at the beginning of the year and then added a little bit more around the end of the first quarter. So we've had that nice run in the holding. We're not adding to it at this specific point in time, but it's something we're still looking at. It's got strong fundamentals. We've shifted a little bit more towards value in our portfolios, and that plays into that story. They've got good leadership going, so we think there's more room for McDonald's to run here.
All right, so with that McDonald's in place, as we talk about whether or not the economy in your mind is going to be supportive of the market overall, it seems as though McDonald's is one of those plays that kind of benefits more when things are perhaps not as robust. Do you feel as though the U.S. economy is still doing well enough to support the equity valuations as we currently see them today?
We do think the economy is doing well. I mean, everyone talks about how we're at the end of the cycle, and that's true. We get closer to the end every day, right? None of us know exactly where the end is going to be, but we think the fundamentals are there. We think the consumer is strong. We're about to go into earnings next week, and we're going to launch and see how that works for the second quarter. Expectations have come down, so it'll be a little bit easier maybe for companies to beat those marks that they've set for themselves. So we'll continue to watch and shift as we need, but we think the economy has some good fundamentals and the foundation is strong going forward. So we believe that it'll continue its bull run here at least till the end of the year.